Hey everybody, this is Jason Stevens with the Stevens Group. It is a great day on 30A. I'm here to give you your mid-month report for May. That's right, May. This is June 15th, and we want to go over what we've seen the past few weeks, past couple of months, where things are going with properties. Everybody's asking, are we in a recession? Is it a buyer's market? Is it a seller's market? Still a seller's market. Things are changing. And I figured the best way to do this is to touch base with one of our local lenders, one of the best in the business, handles a lot of my jumbo loans. His name is Mitch Payne, and he is here with us today. He's going to give us a little insight on where buyers are that are getting money to buy these properties, and where the rates are going, and all kinds of other good stuff. So take it away, Mitch.
Well, Jason, thanks for inviting me, and hopefully we can give some good data to your clients so that maybe it'll help them to make a more informed decision. I've been a lender for 25 years. It's the first time in my career I can't advise anybody of anything. The future is very uncertain. Obviously, we all are following the inflation in the market and whatnot, but the 38 corridor, as I call it, from Miramar Beach to Inlet Beach, it's basically in its own protective bubble. If you would agree, Jason, there for a while, prices were very high. And prices have started to settle back down. And I think that that's just a shuffling and settling back down in the market. However, people who are borrowing money right now to purchase a second home or an investment property or a primary residence above $500,000, the sticker shock. The rates have increased dramatically. There are a lot of economists that say that the mortgage interest rates and long-term rates are going to continue to climb. So really the best advice that we can give somebody is, if the market is stable and the prices are what they are, they're not going to come down $200,000, but the rates are going to continue to increase. So for all intents and purposes, the best advice we have for any client, no matter what lender you use, is buy now. That's the only data that we can provide. There are clients that have waited for the market and the interest rate environment. So I'm going to wait until the rates come back down. And 90 days ago, rates were at 3.5%, 4% on an adjustable rate mortgage or a fixed rate mortgage. And now they're almost double that in 60 to 90 days. So the recommendation is buy now. And if the market settles back down after November and the elections, there's a lot of talk about that. And the market settles back down, you can always refinance at that time with the equity position you're going to be in.
Yeah, I feel like a lot of people, just like you were saying, I'm going to wait for the rates to come down. I've been hearing, I'm going to wait for the prices to come down. I've heard some people telling me this for 10 plus years, and has not helped them. I promise you. So
when people ask me that, or tell me that they're going to wait for the market to come back down, I always ask them this question: how much? We're not economists. We are only, purveyors of what we see and the data that we get per day. And that data right now is saying that buy now, refinance later. Because if you're buying it as a second home where you rent it out when you're not here, or as an investment property, you're losing money now in the interest game, and you're losing money on your monthly income.
Yeah, here's the thing. When you don't invest in property, what do you usually invest in? Stocks. So when property goes down, what do stocks do? They go down. I think the best leverage with your money is with a home, because if you buy a house, and I'm not saying this 30A area is going to go down, but if a property value goes down, then most people that are buying properties over there, they're renting them out, they're using them a little bit, but a lot of the times it's just a stepping stone. They're buying a property, then they want to find a better property, they want to sell that one and move into something else. If you buy a property, if the value goes down, you sell it for less, but guess what? The house that you want, you're buying it for less. And if you sell it for more, guess what? You're going to buy the next home you want for more. So It's a great leverage with your money. And I see a lot of people just waiting, and they're just getting pushed out of the market. Not only have the prices gone up to where they can't get the home that they wanted in the first place because the prices are now too high and they can't afford that. But on top of it, now, even if things level out, which I think that's probably the worst that would happen on 30A, if you have a high interest rate that keeps going up, that home that you can get at 500,000 to $1 million, that one payment, if your interest rate goes up 1 point, that same payment can get you way less of a house. So you might, you might save some money. You probably won't, but you're definitely going to pay more in interest, right?
You're going to pay more in interest expense. And if you use it as a second home, you can, use it as a tax deduction if you file the IRS tax rule. And or, as investment property, then you're using the depletion and depreciation of the property as that as an investment vehicle. But I think that more than anything, it's fear. Fear drives a lot of decisions in markets, and people need to understand that are purchasing on the 30A market that lenders and banks aren't compensated anymore by charging higher rates. It's our job as professionals to get you the best market rate possible. And if, and every bank is literally within just eighths of a points of each other one way or the other, depending upon the time in the market. But if you follow anything on the market, if you're a Googler, you're basically looking at buy now because the rates aren't going to go back down at any time soon.
Yeah, and as far as pricing goes, I feel like Florida, what is it, the #1 state for growth in the United States of America. And on top of that, Santa Rosa Beach, Walton County, where we are on 30A, still the #1 fastest growing county in Florida. That should really tell you something. Like you said, it's a bubble. I really don't, in my opinion, I don't feel like prices are going to go down. Now, if you are a seller and you're thinking, hey, if we hit the top of the market, I think it's eventually going to flatten out, So are we at the top of the market? This is a great time to sell. If you're ready to sell, give us a call at the Stephens Group. We'll take care of it and get you top dollar, because I don't really see prices jumping up. That was unhealthy for the prices to go up like they were. So you're going to go from an unhealthy market of prices going up, up, up to a healthy market of prices kind of going in a flat line, maybe going up a little bit. So like you said, the shock and the fear is only going to last a little bit. And then once people get used to the interest rates, wherever they may be, things will keep going. But there's just too many people still wanting to move to Florida. I mean, half the buyers I have, they're paying cash. So we might have more options. We might have more inventory, but prices going down.
Yeah, I agree. The market and the data says that things are flattening out as far as values, but sitting in a lender chair from the appraisal perspective and the insurability perspective, cash is still, there's still a lot of cash moving down here, a lot of cash purchases that are going on, but a lot of the clients that I've seen lately have opted to finance half of that and hold on to their cash because they could offset that expense or loss by holding on to some of their capital and investing it in other vehicles while the market's a little higher, and enjoying the nest egg, so to speak. That's hard to replace.
Right. All right. Well, Mitch, thank you so much for helping me out with the mid-month report and giving your data from the lending point of view. I think the bottom line is, guys, if you're thinking that you're waiting for prices to go down before you buy, if they go down at all, the interest rate's going to eat up that extra money that you might have saved. And we really feel like things, at least in the 30A market, are going to continue either to go up a little bit or just kind of flatten out. So if you need anything, you have any friends or family that are looking for a property, send them our way. We'll take good care of them. And if you have a property over here, or have friends and family with a property, they're looking to sell it, right now is a great time to sell. If it does go up anymore, it doesn't look like it's going to go up any faster or too fast or up at all. So right now is a good time to sell. Anyway, I hope you guys have a great day. Thank you very much from the Stephens Group and Mitch Payne, and we'll talk to you later.